Let's start recording and see what happens.
Let's start recording and see what happens. Welcome back, everybody, to the insurance panel. Nick Frumkin,
What up?
Matthew Murray. Hope everybody is well. It is the end of September. We are less than a month away from open enrollment.
Woo.
I didn't say AEP.
It's probably going to be October 15th by the time this goes up.
Yeah,
so,
I did. But did you notice that I'm learning from even talking to you, Nick? I did not say AEP. I said open enrollment,
which is good. Yeah, open enrollment is more general. I mean, It is AEP. AEP is coming up on. I mean, that's the name, but I mean, I don't know. Like that's not so. I was just talking to somebody about this the other day, and this is a tangent that has nothing to do with what this video
nothing
is
at all.
about. But it's a good topic of like you want to talk to clients with the way that people talk, not with insurance talk, and you want to talk to insurance agents with insurance talk because it's more specific and it's like whatever. But insurance talk is bad when you're talking to prospects. It doesn't make you sound educated. It just confuses them.
Yes.
You want to, so like when you're talking to a prospect, open enrollment is good. You know, this is your open enrollment. Prospects understand open enrollment. AEP, prospects don't understand AEP. Prospects don't understand LIS. Prospects understand extra help.
Yes.
You know, like these are things that, or same thing with final expense, which is actually what this channel is about. You know, prospects don't understand RPU. Prospects understand a paid up insurance policy. Prospects don't talk about premium payments. They talk about paying their bills. You know, they talk about their pay. I can't even say it right. You know, sending in premiums. They talk about, you know, sending in a payment. Right.
Taking money out of my bank.
Taking money out of your bank.
Yeah.
You know?
Well, it's interesting because I remember you talking about that. I can't remember where it was at, and it may have been on a Facebook group where someone was asking. I think they're going to do a seminar type thing, and me and you, I went a little bit more detail on exactly what to say at a seminar, but we both said the same thing, which is like, let them know that you're a real person and you can talk their language. Don't talk to them as an insurance agent. And I kind of went into like how I do my seminars and the way that I don't just start with insurance because it's boring. I start with something fun and funny, and then I slowly gear them to actually listening to me. And then when they're actually listening to me, that's when I actually talk about what it is. And that little bit right there is only 3 to 5 minutes, but it's enough to get people to want more from you in knowing that you're the expert. But
getting them to pay attention, that's the whole battle, right? With any type of sales, any type of product, no matter what you're doing, getting their attention is the most important thing.
I want to go on a different tangent and we'll stop. We will do it later, but I did go out in the field the other day.
Oh, fun.
With an agent, and it's a funny story. So remind me later, but going back to what we were talking about the Facebook group and all that stuff, I saw on Facebook today where this lady had made 4 posts in the last 2 days. And one was, I'm trying to build out my own Facebook leads. I'm trying to figure out, should I buy an appointment setter, or I've hired my own appointment setter. I've done all these separate things and I can't figure it out. I don't know what I'm doing wrong. To which I just said, you're not doing anything wrong. You're just doing too much. Like way too much. And I said, in your first year of business, you should really only be focusing on buying leads on a weekly basis, calling them yourself, and selling as many as possible. And preferably with one carrier.
Yeah.
But how do you choose the right final expense carrier that's good for you and your business? Transition.
Excellent segue. Loved the tease earlier, you know?
Yeah.
Like we're professional people that do this professionally.
Yep.
It's impressive.
I appreciate that.
Yeah. God, I remember when I first, because I was captive, right? I started as a captive agent. And the first piece of advice that I got when I started as an independent agent, like literally the very, very, very first thing that I was told was pick one.
Yes.
One carrier. And before my contracting was done, because I'd contracted with, like everybody's, they gave me like a menu and they're like, just check the boxes of who you want. And I checked every box.
Sure.
And I contracted with like 10 carriers all at the same time because I could, and it was unique and it was fun that I had all these different options and like, it was great. And then I got that advice of like, just write one. I was told, don't even write GI. Like pick one carrier. If they're GI, walk away. Like learn your one carrier, right? Mm-hmm. And that advice flipped me out. Like I spent weeks researching the different carriers and like trying to decide like, what the perfect carrier was. And, this carrier paid me a couple more points in commission, but that carrier paid me a couple more points in renewals. And this carrier had a telephone app and this carrier had a paper app with a PHI, and this carrier had neither of those. And you just submitted the app and you waited a week to hope, and it was, trying to figure out who did what and what carrier, and I'm building cheat sheets. And I spent weeks. There are still, if you know who I am on the insurance forums, you can go back through my old posts. I put a post in the Final Expense Insurance Forums group asking for help trying to decide what carrier I should pick. At the end of the day, and we're going to get into a lot more detail about this and actually give some legitimate advice, but at the end of the day, it doesn't matter what carrier you pick. If you're new, pick one. Any of them. Throw a dart. I don't care.
Yes.
Just have one.
I got the same advice, but I got it in a different way because I work for a captive company.
Mm-hmm.
I was told you only need this one carrier because brokers have to have all of these carriers to write everything. And with this one carrier, you can cover 98% of the population.
Right.
The only people that you cannot write are incarcerated, bedridden, AIDS or HIV.
Yep.
The other 98%, you can write every single person that you run into with this one carrier. And I thought, well, that makes it a whole lot easier for me. And they gave me a one-page application and a telephone interview.
Mm-hmm.
And that's all I had to learn how to do.
And here's the thing. This is why it doesn't matter what carrier you have, because although your captive company told you that was this huge benefit of working for them, that's true of almost every single final expense company.
Yes.
Not all of them, but almost all of them.
Mm-hmm.
You can write almost everybody you meet. It might not be the best product for that person, but when you're new, that doesn't matter as much. It matters. Like, I mean, you want to do the best thing for people, right? But anything is going to be better than nothing. And if you're only writing one carrier, you're probably not going to be doing all that many replacements. And I know with your captive company, they wouldn't let you do replacements.
They would not allow it. No.
Oh God, yeah, no, it was like verboten. So yeah. So that's the very, very first, if you take nothing away from this video, if you turn this video off right now and walk away, just pick one. Pick the one who has the fanciest brochure or whose name you like the most, who pays you the highest commission, or who, it doesn't matter. Throw a dart, pick one, go right, okay? That being said.
What you'll learn while doing that is you'll learn about how that company underwrites.
Mm-hmm.
You'll learn what nuances there are, what's going modified, what's going graded, if they have a graded, what's going preferred, what's going standard. And you'll start to realize trends.
Mm-hmm.
And you'll start to learn underwriters' names.
Mm-hmm.
And you'll realize that your business is getting issued quicker and quicker the more business that you write with that particular carrier.
Yep.
I wrote for a company out in not Waco, Texas, San Antonio, Texas.
Mm-hmm.
And I wrote the majority of my business with them 1 year. Like it was almost like that was all I wrote. Great company. I would be able to, if I really wanted to, and I did it one time just to test it. I wrote a policy at 9:30 in the morning. I scanned it. I faxed it in. I did the PHI. and I had it into the home office by like 10:15 that morning. By 1 p.m., my commission check was already updated in the system,
Yeah.
and I got a deposit that day for like $1,900. They knew, because I had talked to them so much and done so much business with them. When they got one of my applications, it would go to the top of the stack. They
Sure.
liked working with me, and they would help me out getting things issued quicker, or if I had to do an amendment, they would take precedent again to my applications, just because I wrote a ton of business with them. Carriers know who you are. They don't just, well, certain carriers know who you are, not just by your agent number.
Yeah.
In this particular, I could just say, hey, it's Matthew, and they'd go, hey, Matt, and they would know my writing number. They wouldn't have to ask for my writing number each time. And that is as an agent that was just getting started in the independent world, I think that was like my very first independent shop. That was big for me.
And I know what carrier you're talking about. That carrier is not a player in the final expense market. You know, they're not a big name company that people are talking about, even amongst agents, right? Yeah. Forget, I mean, no clients know what almost any of these carriers are.
Correct.
But even amongst agents, if you told agents what company you were writing mostly, a lot of them would go like, what? I've never heard of them, or if they've heard of them, they've never written them. They don't know anybody who writes them. They don't see it when they go out in the field. It's not a mover and shaker in the final expense industry, but you did really, really well writing just them. And they're a perfectly good company. I mean, there's nothing wrong with them.
Their preferred rates were better than most.
Mm-hmm.
I could tell you that if someone had diabetic neuropathy,
mm-hmm.
they would go graded, true graded, 30/70. If someone had COPD with oxygen, without oxygen, they would go true graded, 30/70. But those things I wouldn't have known unless I wrote them a lot.
Right.
And so when I started to learn what other carriers would take those things, I started making more money.
Right.
But I wrote that company for, gosh, 8-9 months without pretty much writing that and maybe a GI. And that's it.
Yeah.
All of my business was with one company.
Yeah.
And I still get paid renewals from them today.
And that company's renewal structure was excellent. Also.
Awesome.
One of the best in the industry.
Awesome.
Hands down. So, like I said, if you're taking one thing away, and we've talked about this before, pick one carrier, right? Just pick one. I think what we wanted to talk about today, though, is for all of those people who don't just want to throw a dart and they want to find a carrier that might long-term be their lead carrier, because I still, to this day, at least in my own mind, have a preferred lead carrier. I have the one company that I write 98% of the time that I can't write my preferred lead carrier. Mm-hmm. And then I have everybody else. So I have my one main carrier, my primary backup that is going to be the first thing that I check if I can't write my preferred main carrier, and then I've got everybody else. I have a lot of everybody else. You know, I'm contracted with like 20 companies. There's a lot of everybody else. Too many everybody else, probably. But
what made you I guess you've been doing this for
long time.
6 years, 7 years?
Long time. I don't know.
Well, longer than that. I don't know. But
2013, 2014, somewhere in there.
7, 8 years.
Yeah.
When you first started, was that your lead carrier?
No, I don't think when I first started that the company that is my lead carrier was a company that I had available to me to contract with when I very first started.
Okay.
They became my lead carrier, I think, in 2015.
Got it. And how did you choose, I guess, for the people watching, how did you choose that carrier to be your lead carrier?
So things that I still like. Okay, things that I still look for if I'm gonna pick a lead, if I'm gonna pick a carrier, if I was gonna sit down from scratch today.
Yep.
The most important thing, the single most important thing is predictability. I want to be able to know before I make a phone call, before I submit an application, before I tell the client what company I'm recommending, I want to know with 99% accuracy whether or not that person is going to get approved. And I think that's reasonable, right? There are carriers where that is not possible. There are carriers that to this day, even if you write a bunch of business with them, if you submit an app, you're submitting an app and hoping, or you're submitting a pre-approval authorization and hoping, or you're calling and doing a PHI and hoping.
You shouldn't be putting in an application and going, well, let's see.
Right. I might say that to the prospect as a sales team. But
right,
in
but
my
you
mind,
should, correct, but you shouldn't as an agent go, well, I'm just going to throw at this company just to see.
Right. You should know.
Correct.
You know? And if you don't know, I mean, if you're really like, gosh, I have no idea who's going to take this person, I actually have carriers for that situation too, where I can be like, no clue, throw this app into InstaWrite and see what they say.
Right.
You know, it doesn't happen very often anymore. But like that's a thing that like you miss 100% of the shots you don't take. Submit an app with somebody.
Right.
But for your lead carrier, like the first thing that I want is predictability. If I was a new agent and I was still getting underwriting under my feet and still trying to figure out underwriting, to me, that means a telephone interview or something like InstaWrite or some other pre-approval before you do the app, getting an answer. Yes, no. It doesn't have to be a telephone interview. There are several companies that have pre-check type situations now.
Right.
All right. I have a client calling me, but I don't need to answer her phone call. She's called me every day this week. So that would be the very first thing. If I was new, I would want a company that either had a telephone interview or had some form of pre-check verification. Not every company does. Some companies make you submit an app before you find out yes, no. Mm-hmm. That is less good. As a new agent. Now, I don't know that I would care that much. I still want the predictability, but I don't know that I need the tool of getting the pre-approval, you know?
Right.
The second thing that I would look at is when you look at their underwriting, will they cover insulin-dependent diabetics day one? Will they cover COPD day one? Will they cover diabetic neuropathy day one? Will they take direct express cards? Now, there isn't a carrier that does all of those things.
But hang on before you go on.
Right.
Why do you look for those things? Why do you need to know if a carrier will take diabetic neuropathy, diabetes, insulin-dependent diabetics, COPD day one? Is it like direct
express cards?
Is it like we run into a lot of that stuff selling final expense?
It's kind of, yeah, right. You know, back when Aetna, and we'll talk about Aetna because this product doesn't exist anymore. Back when the American Continental product existed, and they took congestive heart failure as a true graded. And I'm almost positive that they don't take congestive heart failure as true graded on any of their products anymore. They definitely don't on the newer products.
Right.
That was a really important thing to have because you run into a lot of people with congestive heart failure. If you want to be able to have in your bag the ability to cover certain conditions,
right,
at better than guaranteed issue. You want to be able to cover congestive heart failure. You want to be able to cover insulin-dependent diabetes. You want to be able to cover neuropathy. You want to be able to cover heart attacks that happened within the last 3 years. You want to be able to cover common things that come up. What else am I missing? I'm missing stuff. COPD. I'm going to repeat myself, I'm sure.
No, you're fine. A stroke.
Stroke, yeah. You know, and it doesn't all have to be in your lead carrier, right? But you should make a list. Let's say you've already picked your carrier, right? You picked your main carrier. You threw a dart, you picked one carrier, and you go out and start writing business, and you start keeping a list of like, well, I had to write somebody GI today because they have congestive heart failure. I had to write somebody GI today because they had cancer that was cured 3 years ago. I had to write somebody GI today because they had a heart attack 14 months ago. I had to write somebody GI today because they've got stage 3 kidney disease.
Right.
And you start making this list of things that I had to write somebody GI today because my carrier that I selected won't take this. After about 6 months, take a look at that list of things that you had to write GI and try and figure out if there's a better solution than GI for them. Everything I just mentioned, there's a better solution than GI. And maybe you can find level coverage with one carrier for all of them, or maybe most of them. I know with my preferred carrier, you know, if they're not paying with a direct express card, you can write diabetic neuropathy, you can write insulin-dependent diabetes, you can write COPD, you can write all sorts of stuff. With my other like 1B company, you can write somebody who's had an amputation. You can write also diabetic neuropathy. You can write somebody with current AFib. You can write, you know, all sorts of stuff. And my 1B company takes direct express cards, right? So if you run into somebody with a direct express card, I have between those two companies, I can write everybody. Like I write a shockingly small amount of GI. I only write GI if somebody is actively being treated for cancer, has HIV, or is on kidney dialysis. I think that's it. I think those are the only reasons that I have to write GI.
Yeah.
Everybody else, I can at least get them a graded plan. Maybe not with one of those two carriers, but like that's really kind of it.
So I'll caveat to this because I used to work for an insurance company.
Mm-hmm.
And they had a niche where they would take people up to the age of 89 or 90. And I would get calls all the time from agents, brokers, etc. And they'd say, Matt, I need your product. And I go, great. When do you need it by? And they go, tomorrow. I said, great. Why? They say, I have an 88-year-old that's in perfect health. And I can write your product tomorrow for you. And I say, great. Do you plan on writing anybody else with this product? No, I'm only going to write the one. To which I would say, I'm sorry, I don't think we're going to be a good fit for you.
Yeah.
Carriers have their niches that they have, and they're great. But when brokers pick them up to write only the one-off cases, carriers will look at that and sometimes not even allay a contract or stop taking your business or terminate you. Because what agents don't realize, and I think this is important, is it costs money every time an agent wants to get contracted.
Yeah.
It's like $125 background check, et cetera, like home office salaries and all that stuff. Like it costs money to run the whole business. And so when you go write the one policy for the 88-year-old, And by the way, when you write that and I give you the street level contract, which is like 110, 115%, and you go write it, you're not going to get 115% on an 88-year-old.
You get what, 70%, I think?
I couldn't even remember. So then, and they'll ask me why. I say, because you're not going to get 110%. You're going to get X amount.
Yeah.
They go, why? I'm like, because you're writing somebody that's 88.
They're not going to live, statistically, they're not going to live 5 years.
Statistically, we shouldn't take this.
No, God, they've lived past their statistical life expectancy. Like, statistically, they're dead. Right.
Right. So we can only pay you so much.
Yeah.
And the premiums are going to be high. So I guess what I'm saying is, don't be the broker that is searching for online, and I see it all the time on Facebook, is I need a carrier that will write this one specific case because of this and this one specific thing. And then people will go, here, I'll give you this one contract. Carriers hate it so much.
Well, and like, don't pick up a carrier just for one case. It never ends up working out in the long run.
Right.
Like, for anybody, for you, for anybody.
And it's okay if they have niches and you want to write them, but I can tell you as a carrier, if you go, hey man, I do need to write this case, but like I'll start writing some other business with you too.
Yeah.
We don't just want your modified business. We don't just want your 88-year-olds. You know, give me some level business too to make it work for the company.
Yeah, and like the carriers don't make money on a policy for something like 5 years.
7.
Like if the policy 7 years, yeah, I know it's a long time.
Traditionally 7, right? But here's the other thing: it's like on a modified policy.
Oh God!
Even though you think because the premiums are higher in a 2-year wait period, do you think that they make money, dude? It takes 17 to 18 years on a modified policy to be profitable.
Yeah.
On a policy. So I've even toyed around with the idea of telling carriers, don't even have a modified policy, take it level or disqualify it.
Yeah. Although I do wish more carriers offered true graded policies. I think true graded is.
So I was this. I don't know if I should tell you this. Well, okay. Anyways, true graded is traditionally like a 30/70, right? 30/70, 100, right? I saw what I think to be, and maybe I read it wrong. It's a graded, the 2-year waiting period. It's like a GI, automatic GI, but year 1 is 50% death benefit. Year 2 is full benefit.
Yeah, that's graded. Yeah.
That's a sweet graded.
That's a great graded. Yeah. There's a few companies that offer something sort of kind of like that. There's a few.
Very few. I just
not many.
But I also read about a carrier today, Nick Frumpkin, that took up to age 99. I don't know why. I read it and I was like,
a money loser for a carrier.
I know. I was like, am I reading this wrong? I was like with my coworker and I was like, there's no way that they have a table of amortization on this.
No, that doesn't make any kind of sense.
So I'm calling them.
Yeah.
I'm getting on with their department on Monday, and I'm gonna find out. But if they do, like, but I don't. If I did pick up that product for an agency, I wouldn't go online and go, these people take it to 99, because then they would get flooded with that, and I don't want to send that business to that company. That's not how you make a good relationship with a company as an IMO or a.
I can't imagine they're even paying commission on something.
I can't be.
Like how do you make money if you're also paying commission on a 99-year-old? Like, right?
Yeah.
I don't know. Because again,
anyways,
statistically, they're not alive. They're already dead.
Yeah.
From an actuarial standpoint, they've already died.
Twice. Yeah.
Yeah. So yeah, I don't know. Anyway. So that's the stuff that you should be looking for. How much commission they pay you is legitimately down the list. All of the people, there's a whole section of recruiters who tell you that commission is overrated and that you shouldn't be paying attention to how much commission you get paid. They're all lying to you. Pay attention to how much commission you get paid. Commission's really important. Really important. Like, yes. Probably the most important thing. It's how you stay in this industry. I can't think of a single thing that's more important than your commission, because your commission is how you live, right? It's what pays for your food and clothing.
Correct.
And, like, it is the most important thing.
But when you're choosing a carrier,
right? But when you're choosing a carrier, it shouldn't, because they're all going to pay you kind of sort of the same.
correct.
Not exactly the same. 5 points here, 10 points there.
A traditional final expense carrier all have heaped front end commissions.
Yeah. Almost all life insurance does, right? Heaped front end commissions. It's how life insurance works.
Yes, the worksite benefits pays more of a.
Yeah, I mean, there's caveats, but
yeah. Anyways,
but like for me now, renewals are much more important to me now than first year commission.
Right.
I would rather write a company that pays 110 at street level, but pays 9 points in renewals for multiple years, than I would write a company that pays 120% at street level and pays 3% commission in renewals.
Right.
You know, as a new agent, you should probably pay attention to how the carrier pays, though. Do they pay you on issue? Do they pay you on initial draft?
Right.
Do they pay you once a week? Do they pay you twice a week? Do they pay you once a month? I'm not saying that these are deal breakers. I'm not saying like you should only write carriers that pay you on issue, or you should only write carriers that pay you twice a week, whatever. But it's something that as a new agent, you actually do need to consider, because it's going to make a difference to your life and your cash flow.
Okay, go ahead. Sorry.
Yeah. No. Say what you're saying.
No, I don't know if it has something to do with it, but you talked about the way that they pay once a month, once a week, once a year, once a day, right?
Once a year, yeah, right.
Yeah,
that's
I'm kind of in the thought process now that I've seen it so many years, is I almost would like it if insurance carriers paid once a week.
Mm-hmm.
Because new agents get into the business, they have no money, and then all of a sudden you can go in this business from having zero money in your pocket to $5,000 the next day.
Mm-hmm.
When somebody who's not used to making money is now making that kind of money on a daily basis, they go out and buy things and do things they shouldn't on a Tuesday, and then they ruin the rest of their week. I would rather somebody get their check on Friday and ball out of control and be ready for Monday. I don't know.
I will tell you personally, as a producing agent who has been doing this for a while, I prefer to get paid on issue, not on issue, on draft. I prefer to get paid on draft. It makes my accounting easier, because I know if I've been paid, the policy's drafted, and everything kind of happens at the same time. It's one less thing to track.
Unfortunately, it's just, that's the world that we live in, where so many people had pushed for payment on issue.
I get it. And as a new agent, I get needing that money quickly. You write a policy on September 4th.
Not getting paid until October 3rd.
And you're not going to get paid until October 3rd. And most of the carriers that pay on draft, it's not really going to be October 3rd. It's going to be like October 5th or 6th. And so You're not going to see that deposit in your bank account until the 6th of the following month. If you are tight on money and you're trying to buy leads every single week, and you're spending $600, $700, $800 a week on leads, which you should be, yeah, that hurts. It's way better to submit that app on September 4th and get paid on September 7th.
Right.
Even though the client's not making their first payment until October 3rd.
But now that you've been doing it for a long time and your cash flow is fine.
I get paid. Yeah, I get paid every day. I have deposits coming into my account literally every day. It makes my accounting way easier. To know that
on the third of the month.
Something is going to draft is the day that I'm going to get paid.
Right.
It's just then I'm just tracking one number, right? Because I need to track the day that stuff's getting drafted anyway.
Right.
So if I'm having to track the day stuff's getting drafted and the day I'm getting paid, then I'm tracking more stuff. I prefer less work. So I don't know. Yeah. Things to think about, things to consider, right? If you're new. And if you're not new, let's say you're not new and you've been doing this for a couple of years, but you're like, my business is a little bit out of control and I never make a carrier trip, even though I'm writing like $200,000 a year. I've never made a carrier trip because I write $20,000 of business with 7 carriers and none of them know who I am, even though I'm producing a lot. This is things to think about. Like it is better for you to write. If you're writing $150,000, $200,000 a year in business and you're not making carrier trips regularly, it's because your business isn't structured right, or you're not keeping your business on the books. One of those two things, right?
Yep.
Fix something, get better.
Yep. Something to think about, guys. I think this is a shorter video because it's really hard to.
I don't know, it's been 45 minutes, man.
It is, I guess, yeah, no, but
I know that's a short video.
It's such a simple process, guys. Find a carrier that takes a lot of things medically wrong with the person, not wrong, but they look past some COPD, diabetic neuropathy, insulin dependent diabetic, strokes after X amount of time, heart accident, starting with like just learning to predict your underwriting will help you know that you're going to write a piece of business, because you don't want to have to go back to write another policy, because then you're wasting other time because you drove out there. It's 1 hour, 1 hour back, 1 hour back, 1 hour back. That's 4 hours when you could have been to other people.
Well, and think about it this way. Like if you are closing 50% of the people that you sit down, let's say you've got a 50% close rate, a pretty standard number, and you see 10 people a week, and you average, let's call it $1,000 in income every time, total income, first year, you average about $1,000. If you go back to see somebody a second time instead of sitting down with somebody else, you are costing yourself $500 guaranteed, because you had a 50-50 shot at selling somebody else a brand new insurance policy. You're losing $500 in opportunity cost.
Yeah.
So every time you go back to rewrite somebody that you already wrote, that you have to correct that thing, in that situation, you're costing yourself $500.
In most agents, if I'm correct, do that
a lot.
1 to 2 times a week.
Yeah.
Right?
And you should be doing it never. Ever.
$24,000 a year at 48 working weeks a year. It'll cost you between $20,000 and $30,000 depending on how many times it's happening to you.
Yeah.
We should. I don't know why I know we want to title this like a better way but we should title it "How to Save Yourself $30,000 this year selling final expense."
Right. Yeah. How to make an extra $30,000 selling final expense.
Yeah. Yeah.
I love it. That's going to be the new title. That's got
to be the new title.
For everybody that made it to the end of this video, click down at the bottom and comment and tell us how awesome the clickbait title of this video is going to be.
We try not to do clickbait titles, but Ryan, our editor, constantly tells us that we need to do these clickbaity titles, and we don't want to be that. We don't want to be those guys.
No.
But we also want our channel to reach people, because we get the emails and the calls and the texts from people that do watch it, that do really appreciate this stuff. And it means the world if you guys comment, like, subscribe, email, poke us on Facebook. I don't care. Let us know that you're watching. And it makes, dude, I call Nick every time and I'm like, dude, this is such an awesome story, or this person is watching and I met these people at this conference and they're like, where the heck's Nick at? Like, it's so cool.
But legitimately, like if you like what we're doing and you want to help other people see this stuff, the number one thing that you can do is click the like button. And the number 2 thing you can do is say anything at all in the comment section. Those are the 2 things that will get other people who are like you, because YouTube knows who you are. It will get other people who are like you and who are interested in the things that you're interested in. It'll show them this video and other videos that we do. So those are the easiest things you can do to help. You can even just say hi guys in the comments.
That would mean the world.
Yeah, huge.
So guys, I appreciate y'all.
Absolutely.
Make sure you subscribe. If you're not subscribed, please subscribe. Comment down below. Say something, anything. We don't care. We love you guys. We hope you have a wonderful weekend, or we're in the middle of AEP or open enrollment. I hope that you're having a successful couple first days, or this might be the first day of open enrollment. I hope that you're having a good one. I hope you're getting lots of enrollments, and I hope you're selling a ton of final expense if you are selling final expense.
It's the best time of year to sell final expense.
It is the best time of year, regardless of what somebody told you. It is awesome. You can sell a crap ton of final expense because nobody else is doing it, because they're all told the same thing. That's not good. Sell your final expense, guys. I'm telling you, you can make so much money.
So much final expense.
Side note. I went out in the field.
Oh, okay. Yeah.
Okay. Yeah.
Also, comment down below what you think of Matt's story, so we know you got to the end of the video.
Yeah. Okay. Please. So I did go to Florida. And my plane late, all that stuff, and I had to have my friend pick me up from Florida, and he was like, "Well, I've got appointments. You want to go run with me?" And I was like, "Yeah, sure, like no problem." But in the back of my mind, I was like, "Shit, it's been a couple months. Like, I wonder if I still, you know what I mean?" Like, I had that moment of I was like, "Fuck!" Like, this guy has never seen me sell, and then you always see people online that are known good salespeople or the guys to go to, right? Mm-hmm. And you're like, well, I wonder if Nick really can sell, right? I wonder if Matt really can do what he says. Like, he's really good on camera, but can he really sell? So that's all I was thinking. Yeah. This guy was like checking me, and he was like, "You want to sell?" I was like, "Hell yeah, dude!" But in the back of my mind, I was like, "Fuck, I don't know." So he had some appointments. We missed an appointment, and then we went to a door knock. And he handed me the card. He handed me the card, and he goes, "This is a door knock." And the lady opened the door, and I was like, "Hey, Debbie," and I just walked right in. And I just gave her the card as I was walking in, kind of like, "Hey, you filled this out?" And she was like, "Oh, really?" And I was like, "Yeah, you totally did. Like that, I wouldn't be here. I'm all the way from North Carolina to come see you." Right. She's like, "Really?" And I'm in Florida. And she's like, "Okay, cool." And I was like, "Come on, man." And he was like at the door, like, "I can't believe that you're just walking to this lady's house." I was like, "Come on, man." And she was like, "Oh, okay, you can sit down there." I was like, "No, we're going to sit at the kitchen table." And I was like, "Hey, where's your remote at?" And I picked up her remote and I turned off her TV. Right?
Yeah.
And I moved over to the Scrabble table that was on her thing and the other stuff. She's like, "It's really busy, really messy." I said, "Don't worry, it happens all the time." And I sat her down, and there wasn't enough seats. It was only like me and her, and then he was kind of like sitting there, kind of standing around. And I put the card on the table, just kind of sitting there. And I said, "You filled this out for one of 2 reasons. Either you're dead or dying." Which I thought was funny at the time. And she was like, "Huh?" She's like, I guess I'm dying." I said, "Yeah, you're not dead, sweetheart. You're okay." Which means, and I said, "But look, you filled this out for a couple reasons. You've got nothing, right? You have something, you're not really sure how it works. Or you're lost about a household income for you and a family member. I don't know. Does anybody else live here? No, it's just me." "Okay, so do you have anything, or like, do you have nothing?" She's like, "I got nothing." I'm like, "It's okay. Most people," I got this from Nick, "that fill out this are usually comfortable paying about $200 a month." And she went like this, like, and I put my hand on her shoulder and I was like, "Debbie, it's fine. I get this all the time. You're probably more comfortable in the $100 to $125 range." And I get it. I said, "You got $50 a month?" She goes, "I got $50 a month." I said, "I'll make sure I take care of that for you." Which is fine. But she committed to a budget, right? And then I went, "Hey, after this, I got to go send my dad some money. What bank do you use?" And she goes, "I use Wells Fargo." And I go, "Do they still have those silly purple checks?" And she took it out and she goes, "No, they're red." So what did that tell me?
She's got a checkbook.
She got a checkbook, right? And I went, great. Let me ask you some health questions. I have to ask these legally because I am an insurance agent. Okay. Have you had a heart attack? Have you had a stroke? All, asking all the right questions. And I go, and look, here's one thing I do know about you. You do smoke. Okay. And you know it's going to cost you more. You knew that before I walked in here. You can't lie to the insurance man. But luckily, you're a female. Guys do dumber stuff, so we cost more. Right? Women are cheaper. You do smoke, so it's going to cost you a little bit more. And luckily, even though you have some health problems, you're going to get level coverage. You see all that stuff on TV, $9.95 a month. I said, that's a scam. It's a 2-year wait period. If they say you're approved on the screen when we get done, and you give me a check for $54.19 right now, and I walk out of here and they say you're approved, something happens, you have a conditional receipt, your family's going to get the $10,000 of coverage. And she went, okay. And that took 7 minutes. And we got in the car and we wrapped up, and I got on my phone. I was just talking. And after about 3 minutes, we were driving. The guy was like, you really can sell, can't you? And I went, hell yeah, I can. But in the back of my mind, I was like, either that was a lay down or I still got it. But it, going back to what we talk about on this channel all the time, all sales are laid down. The people that filled out that card, she filled out a card for a reason.
Yeah.
She wanted life insurance. She wanted to take care of her final expenses. I just made her commit to a budget. I knew that she had a checkbook, that she could pay for it. And I drove the point home that when I get done here today, you're going to be covered.
All you need.
And once I handled those 3 things, she went, okay. She got approved. She handed me a check for $54.13. We hugged. I gave her my card. I did not take a photo. Picture didn't happen. Yeah, it didn't happen if I didn't take a picture. Yeah. I used to be big. I used to be so big on pictures.
Back in the day, that was your thing.
That was my thing. There's a whole strategy behind that, but I didn't have time because he was like, we got another appointment, and that's anyways.
He gave you 7 minutes to go make a sale.
Yeah, kind of thing. He was a mortgage protection guy, so he was used to quick appointments, but I don't think he was ready for the bulldozer that came through that lady's house that one day. But guys, final expense sales is not hard. People overcomplicate it. People overdo things. If you just establish the need, tell them why they filled it out, or help them understand their reasoning for filling it out, establish a budget quickly, and figure out how they're going to pay. And John Duggar talks about this, JD.
Mm-hmm.
Who, what, how much, and when.
Yep. 4 questions that need to be answered.
If you can establish those very quickly, you can sell final expense.
Yeah.
There's no secret. There's no secret thing that's gonna, I don't know. There's no secret formula or thing that you can say. There's things that come off naturally to maybe Nick or myself or somebody who's been doing it for a long time. But guys, just learn how to build rapport. Sit down and talk with 12 to 15 people a week. Go see your leads and sell them, and get paid very quickly. Reinvest back in your leads, and you can make a crap ton of money. That's it. So, guys, I don't want to take any more of your time. It's been an absolute pleasure. Nick, I'll see you next week. We got a new video dropping right now. If you watch, like, you need to go watch the other video that it's a good video. You should go watch it.
They're all good videos.
They're all good videos.
Bulldozer down in the comments, so we know you made it to the end.
Bulldozer. All right, guys.
All right.
Talk to y'all soon.
See ya.